let me ask you something. If you could only buy one tech stock today, which one would it be? If you can't decide, then why don't we look at what the Oracle of Omaha himself, the greatest of all time, Warren Buffett, just did. In fact, he top blasted Google. It's crazy. According to the latest filings, Buffett's Berkshire Hathaway has been dumping Apple and quietly buying over $4 billion worth of Google at the top. Why the switch? Let's break it down together. Google is one of those companies that barely needs an introduction. Founded in 1998, now sitting at a $3.9 trillion market cap. It's kind of a big deal. It went from garage search engine to the backbone of the modern internet. Search, ads, YouTube, where you're probably watching this video, and tons of other stuff. Google didn't just scale, it became the infrastructure of the internet. We don't search the web anymore, we Google things, or maybe now we're asking Gemini, but anyway, still a Google product. And even though its search market has technically shrunk due to AI, it still dominates with roughly 90% market share, a level of control most companies can only dream of. It's essentially a monopoly on search. This is exactly why Google shows up on Buffett's radar. He doesn't buy charts, he buys businesses, which is exactly why he's top blasting Google, which still is crazy to me. His mindset is simple. If you aren't willing to own a stock for 10 years, don't think about owning it for 10 minutes. For him, durable cash flow, wide moats, efficient operations, and long-term relevance matter. And Google checks every box. And that's not just opinion. The numbers back it up. Over the past 12 months, Google generated more than $385 billion in revenue. And growth hasn't slowed. That's the crazy thing. In Q3 2025 alone, Alphabet posted 16% year-over-year growth, with search, YouTube ads, subscriptions, and Google Cloud all showing double-digit gains. Google Cloud led the pack, jumping 34% to $15.2 billion, powered by AI infrastructure and enterprise demand. Total operating income rose 9%, or 22%, excluding the 3.5 billion euro commission fine, with operating margins at a healthy 33.9%. Net income jumped 33% and earnings per share rose 35% to 287. I know that's a lot of numbers, but the bottom line, the TLDR, is this company doesn't just grow revenue, it prints profits. And what's even wilder is that even with this scale, even at the current market cap, the stock isn't outrageously priced. Google's forward price to earnings ratio sits around 28.74, meaning investors pay about $29 for every dollar of expected profits in the next year. In tech, that's conservative. Among the Magnificent Seven, Google is actually one of the cheapest according to PE ratios. Tesla trades for a forward PE of 180. For a company with Google's scale, margins, cloud growth, and cash flow engine, the valuation is extremely reasonable, actually. And I don't own any Google stocks, by the way, but maybe I need to put this on my buy list for the next big market pullback. Google isn't just massive, though. It's a cash printing machine with a cheat code, which again, maybe is the reason Warren Buffett bought it. And I'm not buying it. It's good enough for Warren Buffett. Why the hell is it not good enough for Lark? Anyway, every search, every ad, every YouTube binge costs next to nothing. Yet Alphabet still pulled in $102.3 billion in Q3 2025, with all major segments flexing double-digit growth. The infrastructure is already in place. The data centers, the servers, the cloud backbone. It all handles billions of Android devices, 650 million Gemini monthly active users, which, by the way, if you haven't tried Gemini, holy shit, it's great. Probably the best AI model out there currently. They have massive YouTube traffic without breaking a sweat. And here's the real flex. Google's AI runs on its own Tensor processing units, TPUs, custom chips built specifically for training and serving AI models. While everyone else is fighting over getting supply from NVIDIA, Google just built their own shit. Revenue grows, margin stays fat, and the company can expand decades into the future, all without burning boatloads of cash. Now, guys, before we get into the next part of this video, why Google is a very bullish stock right now, if you own Bitcoin, you have to listen up, because your coins are at risk, but there's never been a better damn time to secure your coins using one of these bad boys. This is a Ledger Stacks, okay? Right here. When you buy this, using the link exclusively down below, best damn wallet in the business, by the way, you'll get $80 in Bitcoin back. On a slightly cheap model, Ledger Flex, you'll get $70 in Bitcoin back using that link down below. If you want to go for an even cheaper option, not get any Bitcoin back, you can still actually get 50% off all of the Ledger Nano X models. Secure your coins. If you have any amount of Bitcoin, Ethereum, Solana, whatever, this is the security investment for your coins. It'll pay massive dividends in the long term by not losing all your coins to a stupid hack, okay? Get one down below because that Black Friday offer is only going to last a few more days. Now look, if the low-cost engine makes Buffett drool, the moat makes him downright giddy. Google dominates search globally, controls most of the world's mobile operating systems through Android, owns YouTube, and now runs a rapidly growing Gemini AI ecosystem with 650 million active monthly users, and it's only getting bigger. Admit it. Use at least one of these products daily, don't you? Probably multiple of them. I use many of them daily. Do you remember the panic back in 2022 when everyone said ChatGPT would kill Google's business? The opposite happened. Its first ever $100 billion quarter proved the naysayers wrong. Of course, Google has its own AI research arm. Obviously, duh. Google's DeepMind has over 20 years of search data to train on, and even designs its own chips for AI behind the scenes. The tools, the data, the distribution. The whole kit and caboodle. Google owns the whole ecosystem and has turned what was supposed to be a threat into a growth engine baked directly into search. As with any company that gets too big and too powerful, the government will, of course, try to overregulate it. However, the Department of Justice recently ditched their plan to make Google sell off its AI toys like Anthropic, flipping instead to just keeping an eye on its future AI moves because last thing government wants to do is go after Google, one of America's most important AI companies, in the middle of an AI war versus China, which the United States has to win. It's an existential crisis. I mean, really, come on. How can the government try to derail Google? It's literally a matter of national security at this point. In fact, they even landed a multi-billion-dollar NATO cloud contract running some of the alliance's most sensitive AI and analytics workloads in secure, air-gapped environments. That means data stays isolated from the internet, ultra-secure, trusted by governments at the highest levels, effectively making Google part of the backbone of the NATO global defense system. That's not just business dominance, ma'am. That is a geopolitical moat that few companies anywhere can touch. Then there's the future. Google's quantum team unveiled Willow, a 105-qubit chip that leapfrogs their old Sycamore design. Willow can perform computations 13,000 times faster than the world's fastest supercomputers. More importantly, it improves error correction as the system scales. So it gets better the more it scales, which means Google can run bigger, faster AI simulations than their competitors. Because again, they're building all this shit in-house. They can optimize massive logistics problems and even accelerate things like drug discovery to cure diseases. I mean, it's very exciting, all this stuff beyond the investment opportunity, okay? All on proprietary hardware that competitors will have a hard time replicating. This is a next generation moat that's still mostly invisible to the market. But Buffett, that son of a bitch, he saw it, didn't he? Buffett! Now you see why Warren Buffett and Berkshire Hathaway are bullish on Google. He's not the only heavyweight piling in. Kathy Wood's ARK Invest just scooped up 174,000 shares. When billionaires who literally don't need more money decide to buy something that they plan on holding for 10 plus years, especially when it's Warren Buffett, the greatest of all time investor, maybe it's worth paying attention. At the end of the day, Buffett isn't buying Google because it's cheap in the way that, you know, most investors might like to think about something. Oh, I'll buy that 30% dip, bro. He's buying it because he's done his homework and he understands the risk is tiny and the upside is enormous. This is a company with unmatched infrastructure, billions of users, massive cloud growth, AI leadership, and quantum breakthroughs already in motion. Honestly, the internet wouldn't be what it is today without Google. He's not chasing the next shiny thing. He's betting on the company that's already the clear winner today, tomorrow, and probably for decades to come. And that's why he's pulled the trigger on over $4 billion of Google, while at the same time selling down some of his Apple. After all, why buy the company that just makes smartphones to go online? I know Apple does more than that, but still, when you can actually go out and buy the company, it defines what the internet itself is, and will likely define AI, quantum computing, and lots of other things for the years to come. Buffett invests in companies that shape the world, not the ones just trying to ride the wave. And honestly, if you could sneak a peek into Buffett's brain for just a minute, you'd probably see him grinning like a kid in a candy store buying up all this Google right now. Because for him, it's not just investing, it's stacking the deck in your favor. By the way, if you want to go more on all of this stuff, whether it be crypto, stocks, or whatever, we have an insanely value-packed weekly newsletter. It actually comes out 3 times a week. It's free. Links down below. 180,000 plus people will get reading it. You can be one of those people. Go check it out. Thanks for watching today's video. I'll see you in the next one.